Pierre Poilievre, the leader of the official opposition, has come out against the takeover of HSBC by a Royal Bank of Canada. He says it'll reduce competition. It's likely to increase borrowing costs for Canadians. Mr. Poilievre will join us in just a moment. Paul Bagnall, you're getting set for the interview. Political pressure on the government here. Yeah,
Pierre Poilievre coming out solidly against a major transaction in Canada's banking sector, the first major transaction in quite a while. HSBC has agreed to be taken over by RBC. It's a $13.5 billion transaction. It has received one critical approval thus far. Two more await that transaction, including the final say, Andy Bell, from the Finance Minister, Chrystia Freeland. We're joined now by Pierre Poilievre. He, of course, is leader of the Federal Conservative Party and leader of the federal opposition. Mr. Poilievre, Pierre, thank you a great deal for joining us. Why do you want this deal blocked?
Competition, not less. After 8 years of Trudeau, housing costs have doubled. Mortgage rates are shooting up because of the uncontrolled deficit spending. A problem made worse by the fact that Canada's 6 biggest banks control roughly 90% of the market for mortgages. The 5 biggest control over 80%. So they don't have to scrap and fight tooth and nail to push rent rates down, or for that matter, push rates that they pay to depositors up. A scrappy, smaller competitor like HSBC presents the hope of more competition in the future. I think it controls something like 5 to 10% of the market in Vancouver and Toronto, the 2 biggest markets in Canada. And in August, I saw examples of where HSBC was about 50 basis points lower on its mortgage lending rates than was RBC. That kind of competition pulls rates down and gives consumers more choice. The idea of having RBC buy up 800,000 customers and $33 billion worth of mortgages is, to me, anti-competitive and will mean higher borrowing costs and poorer service for customers.
Well, quickly, I checked on the mortgage rates at HSBC and RBC this morning, and the rates at HSBC Canada are indeed lower. For instance, a 5-year fixed rate is now 6.1% at HSBC Canada. That same rate is 6.49% at RBC. I won't read the other numbers, but viewers can see for themselves that the rates at HSBC Canada on those different types of mortgages, a 5-year fixed and a 5-year variable, are indeed lower at HSBC Canada. One of your primary concerns is that those cheaper rates will disappear. Is that correct?
They will obviously disappear. Only competition delivers better price and product, and only competition can allow Canadians breakthrough. I should also say, I know a lot of your listeners and readers are interested in the issue of competition. The average age of Canada's 15 biggest corporations is about 121 years. The average year in which our 15 biggest companies was founded was 1899. I think we have one company in the top 15 that was founded in this century. We have a problem where very old, very large, government-protected oligopolies have little competition and therefore little entrepreneurial incentive to become more productive and more enterprising. The only way to change that, or one of the only ways to change that, is to engender more competition in the marketplace. Competition drives us all to be better, and that's what we need in banking and in every other industry.
If RBC is not allowed to buy HSBC Canada, it would be logical that another major Canadian bank would also not be allowed to buy the bank. What happens then to HSBC Canada and the thousands of people that it employs here? As I think you know, when large multinational corporations decide they don't want to be in a particular domestic jurisdiction, they either sell that asset or downsize that asset. Are you concerned about the loss of very high quality jobs in the financial sector if the deal gets blocked?
I don't believe that will be the consequence. So some people have said, well, what if HSBC just gets up and leaves? Well, they they'd be leaving behind $33 billion worth of mortgage assets. I don't think they're going to donate $33 billion of assets or throw it into a bonfire. They also have 800,000 mortgage customers to collect from. So their book keeps them here. So their options would be either to sell to another non-charter bank that does not reduce competition. And if they did decide to slowly wind down their operations, well, then the other banks would at least have to compete for the 800,000 customers as those customers come up for renewal and need a new mortgage. I would rather see all the charter banks in there fighting to win over those 800,000 customers rather than just having the biggest come along and buy them with a financial transaction.
What has the Competition Bureau got wrong here? It has approved this transaction. And I think it's worth noting that the Competition Bureau quite recently has not just rolled over and played dead in the face of large corporate transactions. It fought against the Rogers-Shaw transaction very aggressively, and only yesterday released a report in which it concluded competition, as I think you believe, competition among Canadian corporations is not sufficient. So again, the Competition Bureau has said yes to this transaction. What are they missing? What are they getting wrong here?
I was confused by the ruling when I read it over. The Bureau pointed out that the takeover would reduce what it called rivalry. Well, to me, rivalry is competition, and I think we need more rivalry. So I'm still kind of confused as to why the Bureau approved this takeover. It could be that they believe that the laws as they're currently written don't allow them to block the takeover. But I have seen absolutely nothing from the ruling that suggests that having the biggest bank in the country, the biggest company in Canada, swallow a competitor whole will do anything to help competition or mortgage rates in Canada.
Are there changes to the deal or conditions that could be imposed by regulators that would satisfy you? There were very substantial changes and conditions involved in the Rogers-Shaw transaction by the time it was approved.
No, I don't see any changes that would win over my support.
Why are you not waiting for OSFI, the banking regulator, which also has been more than willing to be assertive with the Canadian banks to render its judgment here?
Because regardless of what OSFI says, my principle is simple. We need more competition in banking. It's common sense. We have far too much concentration. We have these monstrous government-protected behemoths that dominate 90% of the mortgage market, meaning very little choice for consumers. It's hard for consumers to switch banks or lenders, and so they have these captive audiences, and Canadian taxpayers and customers have just been forced to take it from the big banks. I want competition. I believe in a free market, and a free market requires competition. Competition does not happen when the biggest player simply swallows the seventh biggest player, and Canadians are left paying the price.
Do you believe in competition in Canada's dairy and poultry sectors, where you have voted in favor of a bill that would make it illegal for Canadian negotiators, trade negotiators in the future, to open the door to more foreign access to Canada's dairy and poultry sectors?
Well, the thing that's driving up dairy and poultry prices right now is rising energy costs. And the solution to that is to axe the carbon tax to lower the cost of feed for both poultry and dairy cows. That is the most common sense approach to address that problem without having to pay tens of billions of dollars to buy back quota.
Okay, we have a time for at least one more question. A lot of your concerns on the takeover, of course, are related to the mortgage market. What are your solutions to a very difficult housing market in which prices are escalating in many Canadian markets? And every housing economist out there says supply is the issue. With the population of Canada increasing the way it is, regulators and governments have the almost impossible task of adding sufficiently to housing supply. What would a Conservative government do?
Well, after 8 years of Trudeau, housing costs have doubled, mortgage payments have doubled, rent has doubled, down payments have doubled. After 8 years of Trudeau, UBS says Toronto has the riskiest housing bubble in the world. Vancouver is the third most overpriced market when you compare median income to median price. Why is that? One, because our mortgage rates are being driven up by Trudeau's deficit spending. I'd balance the budget to bring down interest rates. Two, because we have the fewest homes per capita in the G7, even though we have the most land to build on after 8 years of Trudeau. And that's because we have the second slowest building permits of any of the 40 OECD countries. My common sense plan requires cities permit 15% more home building per year, or they will lose federal infrastructure money. I'll link the number of dollars the cities get from the feds to the number of homes that get built. If they beat my target by 10%, they'll get 10% more money. If they miss it by 10%, they'll get 10% less money. I'll require every federally funded transit station be surrounded by high-density apartments. I will sell off 6,000 federal buildings and thousands of acres of federal land so that we can build. And I will cut taxes on home building. These are the ways that we're going to reverse the disastrous housing record and housing hell that Justin Trudeau has caused in 8 years.